Hello. We're back to return pullbacks. 30 minutes right on the money. I have to take my shirt off. I'm hot. Okay, wait, I have to text somebody. What I'm watching here, this is just the return pullbacks. I, yeah, this is just the return pullbacks. Return pullbacks are trades from, let's say, 84.50 at 165 on the profile up until 85.50, or from 83.25 down to 80 even VPOC. It's trading the thin parts of the distribution into the thick parts. Notice how it's 11, and I'm sitting on my hands, right? But one thing that should be noted is 86.50. Notice how the POC thickens up at this distribution here. That tells me we're good for a breakout. So I know where the market's going. I just can't position myself correctly without fomenting some sort of emotional tilt, which is why I sit out of it. How you trade this is when you see the thickening of POC and also the refusal to move lower at 86.25. Watch, I'll show it to you. See how the floor is 86.25? Right, we get below it for a second, but we're still holding POC. And then we thicken up big time between 87. So VPOC was just 86.50, which is the primary indicator for getting long here. But now the distribution, this is called kurtosis, profile kurtosis, when it's curved like this. Now the distribution is bullish because what somebody on order flow would call an unfinished auction is the thickening part of the profile and the less thickened part of the distribution. But more important than that, VPOC is shifting higher. That tells me that the value of the market is moving higher from an auction market theory perspective. But you can't just trade off of auction market theory. You can't. I could say you could, but it's better to trade other people. So how you would trade it is you get in at 85.50 or 85.75, the LVM, which is what I think I tried to do here. Let's see if it came down during that time at all. Yeah, came down to 86. We're gonna watch that. I blinked and it moved. 86.25, 86, 17 trades there. 11, 3, 4, 86.25, 17 trades. The Q pulls most likely on the bid side, because they, from a game theory perspective, they know it's the right thing to do. They don't want to provide liquidity in these thin areas, especially. And so the seller sells their market order 17, and they pull. He gets a poor fill, and they rally. It looks more like a liquidity vacuum down from 86, 85, 75 up back into value. A liquidity vacuum meaning the orders pulled, and then they repopulate and the market prices in again. So that person essentially, it looks like at 86.25, who sold 17s, he got rugged basically. And I try to get in there and notice that the queue's going to stuff. There's 8 on 86 right now, 11. I'm watching the sell queue now. It goes from 4 and then disappears. Does 13 trade? Yeah, 13 trades. And then buyers stuff the queue and it moves up aggressively. We come down back to 86. Sits there for a second. I pull the order because I know I missed it. So the constraint of time, the fact that it's only there for the opportunity is only there for like 2 seconds, and not only is it there for 2 seconds, but you have to pay an uptick. What that means is the Norden manual that I ran through and took notes on that I posted. If you're trading tick by tick in one market, trading limit orders bid ask is a huge edge. It's a tremendous edge. And so if you wanted to get in at 86 and play the value era, you'd have to let go of part of your edge and play the uptick. So you'd have to mark at 86.25. Watch, I'll show you. It'll rally here in a minute. See, notice how it goes from 4 to 14. The Q stuff. There's no way you're getting filled there. Now we're already back at VPOC. So it was like a tick. It was a tick long trade. Like, so there wasn't even an opportunity to get in. An opportunity to get in at 86. Really, the best thing you can do here is just observe. Did it even? Yeah, we got down to 75, and immediately they pulled. Did 13 trade? 13 trades on the bid. It looks like sellers are getting ready to pull now. On the inside prints, on the bid, 13. And then we're back at VBOC like that. Now, so the trade would have to be up to 87.25. You couldn't just take the VPOC. You could and maybe like catch 4 ticks, but catch 2 ticks, I mean, but it's just not optimal. But it's there nonetheless, and that's how you'd play it if you could catch it. But now notice how we're thickening up here. We come back down to 86 briefly, and now buyers on the bid push it up. There's no tape on the inside prints, and then what you're expecting to happen happens. The run of high of day. Because value is consolidating right below it, and so we're looking for liquidity. We hit it for 2 ticks, and then we sit there at 87.50, which is completely fine. The fact that we sat there at 87.50 and we didn't break lower. Boom, 50, and then 15's absorbed on the ask inside print. Can't get below 87.25. A little bit of tape on the bid ask inside prints. Only a 9 trades on the bid. So the order flow here is just being the order flow here is just being sustained by passive participants. 14 trades, and sellers can't even hit the Q on the inside prints. That's an indication of weakness from sellers. Then 5 trades, right? And then shoot, all of these people who trade 39 and 12 at 80.25 and 88 evens. It's people getting liquidated. Now the question is, if they form a thickened part of the distribution relative to the profile from 87 or 87.25 up to 88.25, we're probably moving higher. Or if they can even hold 88. I notice how I put an order here, I cancel it immediately because I'm sitting in my car thinking about how I'm an unprofitable trader making pizzas 6 days a week, right? And so, I could take the breakout trade here because I know it's going to break out, and maybe I'd suffer a little bit of pain down to 87 even, 4 ticks, and then I'd have to inevitably pull the trade. I'd say, okay, I was wrong, but that takes up mental bandwidth, and if I do that, and it does go against me, I'm tired. I'm tired already, right? And so I wrote down return pullbacks, and that's all I was going to take. And that's what I took here. And I think I get out for a tick loss. It's a bit antsy. The 15 and then the 21 trading on the inside prints at 87.75, which is why I got in. But notice how there's no movement lower. We got to 87.50 and then came back to 87.75, and then we uptick for a tick loss. That's actually a perfect trade. I got in because of a poor entry. That's a perfect exit. I got in because of a poor entry, and then I got out because it was a poor entry. I probably could have gotten away with a break even at 87.75, but I didn't. So, am I giving money away? We're back down to 87.50, but notice how the range here is three ticks on the. Notice how the range here is three ticks on the LVN between 87.50 and 88 evens. That tells me, and then 20 trades, and then we move down to 87.25. I swear this is the trade where it went against me, but I guess not. So it turns out that I was early, and I had the right read, and I scratched too early. Frankly, we'll watch it again. I think that's why I got short. Cause the okay, yeah, cause the run of liquidity from 88 to 88.25 was small, 11 and 12, and then we immediately downtick. It's not a huge run. If it's not a huge run, the market's going to move in the opposite direction pretty fast. If you see price, if price sits in a in a 2 to 3 tick range for a long period of time at say 87.75, after running high of day, it's most likely going to go back. That's an indication of strength. But that's why I got short there, because we hit 25, liquidated a bit of tape, and then came down to 75 and sat there. They fill me there. 21 trades, 87.75. It looks more like it's absorbed there, and they're offering higher. I tighten my stop here. Maybe I should put it behind high of day. In a perfect world I would, but I pulled it because we were sitting there now, and they uptick and stop me out. And then 12 trades at 88 evens. It's absorbed, and price moves lower off of 12 being absorbed. So that person got left out to dry. 20 trades now. There's aggressive sell pressure. 14 at 87.75 buys, and that's absorbed as well. We're pushing back down to VPOC, and I pull the order. I get short here on a return pullback back into the distribution. Just based off of sell pressure, it kind of looks like fear of missing out, to be honest. And we're looking for continued pressure down to 86.25. Notice how 87.50 we sit there. We sit there at the edge of value. That's good. Somebody pulled. I want to see if that. Yeah, it was somebody getting out. It was a buyer getting out. So the buyer gets out. Looks like it's going in my favor now. Two upticks to 87.75, back down to 87.25. 87 even, we're pushing here. But notice how it can't get lower. That's where I take the tick loss here. The longer my trade stays open, the more susceptible I am to what's called adverse fill selection. There's obviously a time frame for how fast the trade should work. If I want a return pullback from 87.25 down to 86 and price when it hits 87 and 86.75 rallies back to my entry, that means I'm on the wrong side of the trade. Moreover, because it's doing it at the value area at 87.25, and there's a bunch of thin spots behind it, 87.50 through 88 are thin spots in the profile. We're building out value there. That tells me price is going to break out again, because value is shifting higher. That's an anomalous behavior for a standard market to defend or hold 87.25 if you're looking for mean reversion, because it's the thick end of the distribution, and then it breaks out. Now I'm aggressively looking to trade the same reversion that I botched initially, which is a short off of the drying up of tape or the running of stops. So I'm trading against the people that just got liquidated now. The market is more free to move to the downside because they're gone. Or the I can't say that. I can't say the market is more free to move to the downside because I simply don't know the mechanism for why the market moves in the opposite direction after liquidating somebody. I don't know if they were holding overnight or whatever. I get short. I cancel this order because it's been on the book for too long and I'm subject to adverse fill selection the longer my order sits in the queue. But it fills me because I press cancel the moment it fills me, which is a skill issue, frankly. Notice how we're sitting 88 to 75. That's contextual. If we had just ran 89.50 and we were sitting at 89, we down ticked maybe two ticks off of just Q priority leapfrog, Q jumping. I have to write on that leapfrog Q jumping noise. It would be an issue, but here the fact that we moved four ticks down after we liquidated people, and at 89.50 there were fours, ones, and twos. That bodes well for me, and so I'm thinking about adverse fill selection here when I go to cancel the order and it fills me. And my stop is going to be 89.75 most likely, or even 90, because there's a 63 there. Now they come up and notice how that's so painful to see, but okay, so 14 trades. The sellers are in control, 89.25. How there's a 14 on the inside prints. We come lower, and the buyer pulls the queue now. 14 at 88.75 on the bid. Notice how it goes to 7, and the orders pull regardless of what's on the inside prints. Buyers know that sellers are in control, or even though there are no active sellers there, and they're pulling because they don't want to provide liquidity to them uh, at a loss, right? So that's why they're doing that. Sitting there is bad. Sitting there after coming down 4 ticks is good, especially because I'm in profit. Then a seller kicks it up at 88.50, 13 trades, 88, 25. Now I'm watching to see if 88 and 87.50 are going to be defended from buyers, if sellers are going to be absorbed on the inside prints, uh, to a lesser extent what the queue looks like, because I don't know what to look for in the queue. And so it's going against me here. I'm still watching 88.75, and I've had so many trades play out like that. That's why I took the 2 tick win. Um, I honestly thought I had missed my move from 88.25 and that they were going to rally it up in the opposite direction and use 88.25 as a distribution, which really just comes with experience and thinking about the market. Now I'm looking for how 88 behaves. Notice how there's a 14 at 88 and that gets absorbed. We see upticking, which is bad, but notice how fast it is, and we immediately, off of 25, we immediately come back to 88, which is good for sell side, sell pressure, and then at 12 trades on the inside prints, and that actually moves the market lower, or it holds it. The 11 and the 15, even though they're bigger orders, they matter less, and they only ticked up for a split second before value came back down to 88. So the market's weighing this 112 order, this 112 lot on the inside prints, sell side, with more value than it is the 11 and the 5 on the bid, which is good. And I make note of that. I thought it was initially absorption, but it wasn't relative to the other two orders, especially. And that's important because 88 is a key level in the trade, because it's the thicker part of the distribution down to 87.25, right? And so the fact that buyers are there to defend it, and that they can't move it higher is good. If it ticked up realistically, even like 88.25, and then we saw it sitting on 88.25, it would be a different story. Now it moves up, but it moves up on low volume. So that makes me think people are looking for liquidity here. And then a 15 trades, sell side on the inside prints, and they hold it. And then the queue pulls. Buyers most likely again off of 88. So something like 87.50 here. Now the question is, are they going to rally off of 87.50 against me? From a queue perspective, they're just not going to let me get out, and there won't be a reversion down to VPOC in at least 86. And the second question is, we've built a distribution above the value area high, maybe 3 times now. So are they going to hold 87.50 and rebuild this distribution? And what that would look like, not from an active participant perspective, but it would be a fast move from 87.50 from the queue, the orders in the queue shifting as market makers stack on top of each other to get queue priority and thrust value higher, if that makes sense. I have to write on that. I don't really understand it very well. I have a cursory perspective of why the market moves tick by tick in the ES, relative to market makers competing with each other. But it happens nonetheless. And then that 11 trades 87.75, and it actually moves the market lower. What I'm gauging here is, are these orders that active participants are putting in effectively moving the market as they should? If 11 traded there and nothing happened, it would be an indication of strength from buyers and weakness from sellers. Now see how it moves up on low volume now? It looks like they're going to shift the queue. I get out there because we hit 87.75 again. I already know what's going to happen. The market maker is most likely going to run it in the opposite direction. They're going to stack on top of each other, and I'm going to get sidelined back to my entry. 11 and 11 trades. It ticks down for a split second, which is bad. Uh, it looks like the market makers are in control now. 88 to see how it sits there. Just coming off of 87.75. It sits at 88 on low volume. I already know what's going to happen here. And then I pull my order like a tick above. Just get me out because I don't want to deal with this anymore. I know what's going to happen. You hit 87.50. We rallied off of it. We didn't even hit that. You hit 87.75, and now the market makers are in control. The Q's shifting to the upside regardless of order flow, and it looks like we're gonna run high of day again. Was that a 20, and then a 25 trades at 80 88.25. A 23 trades and then a 25. And then that's so funny that I get out of the trade and we're back at the entry at 89. Did I read that correctly? No, I didn't. I just adjusted the chart. Those orders aren't moving the market. The buy orders at 88.25. That would be an alright place for re-entry. I would just have to watch the Q. If they sat 88.25, if I saw a strong rotation from sellers on the Q down to 88, I'd be interested. But it doesn't look like that's happening. Now they're offering higher. So market makers are. Um, this looks to be a passively driven session for order flow, and market makers are pushing value higher, probably to run 89.50 again. The floor was 87.75. The edge of their phantom distribution. If I go back, we were at 89. Notice how there's a whole new VPOC is shifted for the day, 90, 92. Values shifting higher. We were at 88, 88, which is right there. Yeah. Okay.